Hey, greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for Thursday, July 31st. Lots of things going on today. I think it's time to ask the question, is it time to call a top? Um, there are a number of reasons. One of them is that despite the massive up futures overnight after great big cap tech earnings from the likes of Microsoft, Meta, and others, the market still closed down on a higher than average volume day. And I'm going to show you more reasons to be a little concerned as we take our journey through the markets this evening. Again, my name is Jeffrey Scott, marketmripro@gmail.com, Google Groups top-down trader. Um, on my video of April 7th, I said the bottom is in. I'm pretty close to saying I think the top is in. Might give it another day, but as I said there, I'll show you the reasons. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. The intent of the video is to show you how to use my tools for top-down analysis. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in the report. Trading stocks and options should be considered risky and should consult with your financial advisor before making trades. And I have tools for multiple platforms, but am an independent trader. My Google group is called Top Down Trader. Love to have you join. You sign into Google Groups. You look for all groups, type in search Top Down Trader. Let me know how you want me to contact you, and you're in. I think it's something that you'll enjoy. You get nightly videos and commentary, even when I don't post them in YouTube, and sometimes I just don't post them in YouTube. And you get educational opportunities that I don't offer to the general YouTube audience. I treat you just like I treat the customers who bought my products. When I do a support, I invite everybody in that group. So please join. And when you want to quit, just quit. Easy peasy. Speaking of easy peasy, we are official October 27th and 28th, 8 to 5, both days at the Palm Beach Gardens full service Marriott Hotel. It's an older property, not far from I-95 and PGA, but it was refurbished during COVID. It's actually pretty nice. $12.50 a person. I will feed you and water you all day on Sunday and Monday, and those that come live get to go out on a cruise on Stocks and Docks, the yacht. 2 packed days of education, software instruction, and back to back, John Person has his meeting on Friday and Saturday. I know a number of people are going to do both. If you have interest in his and you don't know how to find him at personsplanet.com, just let me know. I'll hook you up. There is a separate fee for each meeting. And for more information, reserve your spot, please contact me at marketmripro@gmail.com. Room is not full yet. We're starting to build up the number though, and I cut it at 12 because that's all I can take on the yacht safely. And we're going to have a great time. Hope you can make it. Know your news and earnings. So this has been a week to remember. Um, Starting on Tuesday with Case Shiller's consumer confidence, some job openings. Wednesday with ADP and GDP. The Fed disappointment. No one expected them to cut, but I think what we did expect, perhaps, is that they would have talked about September in a more affirmative fashion. Thursday, today, we had jobless claims, employment costs, PCE, everything just a teeny bit hotter, perhaps, than expected. And then earnings. And, Wednesday night, Meta and Microsoft knocked it out of the park. And on Thursday, Apple did great, and Amazon, at least the immediate returns were negative. Coinbase was also negative, but sometimes those immediate returns, especially on Amazon, where they love to give a weak number going forward. Um, Not that they are necessarily trying to set them up for upside surprise, but it didn't look like their forward guidance was great. It's trading off after hours about between 2 and 3%. So we still got some earnings in the morning, some big energy names. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Again, more information, tech questions about the product, coding at marketmripro.com. And for questions about how to use it, to buy it, anything, just reach out to me at marketmripro@gmail.com and think about joining our top-down trader Google group. All right, so let's start here with the market daily briefing. Volatility was up a bit, closed up 0.28. It actually opened down and again finished at the high. The dollar was up 22.22, right where it opened, but at the high part of the session. Bitcoin down a bit, modestly, minimally, at the bottom of the day. Spider down 0.4, Qs down 0.53, Diamonds 0.78, and Russell 0.97. All right, one thing I didn't like seeing, so the Russell's down 0.97. It's just weakness across, you can see the red bars to the left. Is it horrible? No, but it's a number of days in a row. If you look at 5-day changes, we're starting to build up the negatives. And it just kind of feels toppy. The new highs minus new lows on the NYSE, -2, -24 in the NASDAQ. That's now gone negative. If we look at stocks above the, or stocks advancing in the S&P 1500, 24%, 29% on the NASDAQ, 32% on the NYSE, that's pretty lousy. If we look at 1-day change, communications, utilities, and industrials were up, but nothing was up more than 1%. And you could see big loser was healthcare, probably another super bad day for value-based care, managed care. Real estate was down 1.76, materials were down 1.26. If we look at the other themes, you can see social media 2.74 up, e-commerce 1.23. So you're thinking Meta and Microsoft. Dow Jones Internet 1.12. But look how quickly things turn negative. A negative session in the market. Let's start to build a case of why I'm concerned, more than just saying that we had a negative session in the market today. If we look at the timing model on the daily, kind of looks like it's starting to come out of the faucet, which is not a good sign. The bongos have turned red, which is the trend on each of the daily signals. We have broken below the WMA on the Russell and the Diamond, so we now have sell signals on the daily. You look at the spider, and what a reversal. It set an intraday all-time high, and it closed at the low of the day. And if it's not, it's pretty close to a bearish engulfing pattern, taking out 1, 2, 3, 4, 5, 6, almost 6 days of time. Not good on the spiders. And the same thing on the Qs, a bearish engulfing pattern after setting an all-time high. It looks like a top. What other evidence do we have? Now, if you want to mute me and say it's not a top, you can look at the weekly timing model, and that'll look a little bit better, and you'll see that we're still green in all of them. But by the time the weekly one turns to a sell, you're going to have lost a little bit of money. So I pay a lot of attention to things like the Hindenburg Omen and the daily signal for short-term movements. Enough so that I use today to buy some puts, raise some cash, and reduce my exposure in the markets. And I'm not sure I'm done. Haven't gone to counter ETFs yet, but maybe that's something that's next. If we look at the US index ETFs, and let's just start here and start to build the argument. Spiders clearly breaking down. You could certainly argue to hold off on the negative stuff until they break the 17. We'll find out pretty quickly. But you could see seasonality, at least for the next few bars, is negative. Still have a nice 17 over the 50 over the 200. And I don't like the fact that the big down day, the big sell-off day, is occurring on big volume. And the OBV is cross negative. So there are a lot of things here to make me a little bit nervous. Doesn't mean it's going down. I'm just starting to build the case to get a little bit more defensive. Here is the Hughes setting an all-time high during the day. Pretty much a bearish engulfing pattern. And again, like the spider, still has a 17-day above them and going into a flat to down period of time. And you could see it had a CPR sell and it had big volume to the downside. Again, building the case. Let's look at the diamonds. Had not set an all-time high with this rally. Don't know why it ever stays after I put this in, but let's just try that again. Failed to make an all-time high. Has broken the 17 pretty convincingly. A pretty ugly candle today, isn't it? And doesn't look like it's coming right down here to test the 50. Okay, that's not looking very strong. Negative bearish momentum, bearish breakout, and a new EMS signal. It's already at a bearish CPR. Okay, that's not real comforting. Take a look at the Russell. Has been the weakest. Nowhere close to new highs. And we're going to get a golden cross perhaps in the next day or so. And it's going to be interesting to see if we can pull, if we don't pull back there. And then the big question is going to be, does it hold? Not good. EMS bad, CPR bad, volume bad, momentum bad, breakout bad, out of a squeeze and breaking down OBV. I'm making the case that I think we got to be careful. You'd expect volatility to be up today, and it doesn't take much on the VIX futures here. It's up 10% off of a low number, but 10% is a pretty big move. And then the other thing that's been a little bit concerning to me is that we're starting to see the dollar move up. And it broke right through what I thought might have been resistance, probably heading to the 200. I don't think the US markets like a strong dollar. Now, again, we have lots of other reasons. We've got the tariffs starting again tomorrow. Of course, we could get something overnight, such as a pause, a delay. Trump listens to the Supreme Court, who may say that they're unconstitutional, and I have no idea what happens to the agreed to trade agreements. I'm not sure that's good news or bad news. I mean, so much going out there now. On the commodity front, risk off on stocks. You would have thought gold would have done well. It was up 0.67, but closing at the low of the day. And silver was actually down, probably more related to economic use than the precious metal side, down 0.5%. The US dollar pulled up, oil pulled back a tad after a nice run up, down 1.79. Maybe a reversal on natural gas, but it's so low in its pattern, it's hard to carry even with a 1.8% move. And if you look at the 10-year and the 30-year, they both finished higher than they opened, but they were both down on the session, and maybe that's optimistic, down 0.14 and 0.41. Not a pretty picture. It's amazing how fast my sentiment in the markets can deteriorate. I like to talk about a shift to the left when it's looking bad and a shift to the right when it's looking good. These are the 10 deciles in between the top and the bottom of the Bollinger Band. This is above the band. This is below the band. NYSE, NASDAQ, Russell, and the S&P 1500. And what you want to see is, well, you want to see them all bunched up in the middle in a neutral market. This is a very bearish looking market, but it's not bearish enough. 19% below on the NYSE, 26% on the S&P 1500, 25 on the Russell, and 19 on the NASDAQ. That is not a good sign. It's building, but it's not at a point where it says we've sold off so much we're going to bounce. So it's not our friend. It tells you the markets are weak, but they can get weaker. Look at market breadth, and you're going to see something we haven't seen for a few weeks, and partly why I'm sort of more bearish tonight than I've been. And if you remember, I've been saying, where's the Hindenburg Omens? Well, we got one. On the left is the NYSE. On the right is the NASDAQ. Let's just shorten the time frame. Talking about coming out of a fire hose. Now, we've seen this. We've seen this. We've seen this. It could recover. But notice what we don't see is a Hindenburg Omen, which we saw today. So I'm very nervous when I see this breaking down. The NASDAQ traded higher before it reversed. On the other hand, the NYSE opened where it closed and just traded lower the whole session. Very different. What am I going to look for? This here is the Hindenburg Omen. It tells me it's a volatile market and the pros are getting out and us amateurs are still going in. Typically, it's not confirmed until you get your second signal in the next 31 to 35 days. To me, that's a big deal, but the big confirmation is going to be when we drop below the 50, because when I've looked back in time, that's really been the separator between a small move and a big move. So we're still above the 50. These are daily charts. Volume a little bit higher today. The NASDAQ is higher, just doesn't, we don't have all the data yet. Look at the breakdown in breadth. Now, you look at the buckets, you look at the breakdown in breadth, and maybe you want to say to yourself, well, we're there. No, this is what it looks like when I bring in what a real pullback looks like. So we're not there in the breakdown. And then over here, you can see we finished negative on new high, new lows, negative on advanced decline lines, and negative on up-down volume. But the one thing here that's really got me, and the big difference today, is this little triangle, and that's a Hindenburg Omen. And we'll talk a lot about it this weekend, especially if we get another one tomorrow. Here's why I worry about the Hindy. There has never been a major market correction in 100 years that was not preceded by an Hindenburg Omen. So until I saw one, I wasn't thinking major correction. Second thing I worry about the Hindy is that even if it's not a major correction, only 1 out of 4 is. Markets don't go up after the Hindy. They might go up a little bit. Ultimately, they're going to pull back. So I think if you're an options trader like I am, predominantly options on my short-term accounts, long-term, I'm a long-term position holder. Why would you risk waiting until options expiration in 2 more weeks? I think that you got to be worrying about maintaining capital, because if we get a pullback, you'll want to have money to invest. I didn't say go short. You could go short. I did buy some puts. I am raising cash and I'm being careful and I'm reducing my position size. I'm tightening up my stops and selling out certain positions. If we look at the second market breadth chart, I just wanted to show you that if you look at the 13-week new high, new lows, they've come down a lot across the board, but they're not at reversal points. So sell off for sure. Markets look weak here. If I was a betting man, is we're going to go down. I don't know if we're going down 2%, 5%, 10%, 20%, but I'm going to be watching. I'm going to be watching closely, and I'm going to be looking for a reason to go to cash. The other thing is I'm going to be looking at potentially nibbling on some either index options to protect me or some contra ETFs. But this was an impressive day. Now, we've seen divergences. We've seen divergences in the RSI. We've seen divergences in the stocks making new highs. A lot of reasons to tell us that this was getting toppy. I needed the Hindenburg omen to put the cherry on top. All right, so are we going to look at 1,000 great new stocks to buy tonight? No, we're not. I'm going to look at the FANGs. I'll look at my 2-dot momentums and a couple of recent. If I really wanted to buy something tomorrow, let me just check on the earnings date. Oh, sometimes, here you go. Earnings are not to August 14th. John Deere, obviously a a tractor and other farm machinery and other machinery company, has a nice setup here. Beautiful uptrend, had a pullback, about to take out the trend line, taking out this trend line with a CPR and recent EMS, breakout momentum, relative strength and OBV turns up. I might be willing to look at that tomorrow, but I'm not planning on opening up a lot of new longs. Here's what I'm afraid of happening. Here's one that we've been talking about. Did it break down? Absolutely not. In fact, if you followed my trading plan, and again, this isn't investment advice, it's just demonstrating how I think, I would have gotten in, which I did at that line, and I'm just above that. So I haven't lost anything. But boy, I'm not going to give it much room. I'll take this position off in the morning if we close below that, or if we trade below that line. I've got no profits in it, so it's not worth holding it. On the other hand, here's one that we talked about yesterday, and I didn't really know enough about it, but it was one of my 2-dot moves that I thought, well, at least it's interesting. Boom. And earnings came out, but I don't make any money. It does have some revenue. Um, I don't think they went up because of the percent change, maybe because they beat expectations. But what did my dots know? Because for 2 days in a row, they were telling you to buy the stock because we had 3 dots. That was interesting. So let's start by looking at some of the big name stocks. And we're going to start with Apple because I forgot to put it in that list and somebody already called me out on it. Apple had earnings tonight, and I doubt there'll be enough to save the market. I hope they are, especially with Amazon now down at 220. Oops. So Apple was closed at 207 today. It's right now it's trading closer to 213. So it's back up here. It's still well below the 200-day moving average. But look at seasonality on Apple's not too bad here. So I might look at Apple. I doubt I'm not sure I want to add to my longs, but Apple might be okay. Amazon, on the other hand, closed at 234. This is going to hurt me tomorrow, and it opened. It's right now it's trading at 230. That's wrong one. Right now, Amazon is at 220. So that's a $14 dip, $16 dip. Don't know where it's going to end up. It can moderate some. They'll have their presentation, and maybe they'll have the market feel better. Amazon a lot of times will gap up on earnings and then fade it. We'll see if it fades the gap down that it looks like it might have. APP, big move on earnings. Why do I follow this stock? Well, look at where it started here. Less than 100, it's back up almost to 400. And we're talking since August of 24. I believe earnings came out and they were really good. So you should always be checking, and we've got your earnings dates in here for you. Look at that, changes, amazing. Looking at surprises and looking at a PE, it's a high PE, but not if I'm growing that much. I think APP looks really interesting here. Again, do I want to chase things if the market's selling off? No. Google had great earnings, kind of had a stalling day. Today was down, hasn't broken down yet. Meta, what the king, man. Now, interestingly, it finishes with a doji up there. Um, Up 11%. It's hard for me to believe that that's going to be an exhaustion gap after the earnings it had, but it could be. I mean, it's had a nice move up, broke out from this flag here. Great day for Meta. Um, you're buying an all-time high with the market looking like it's topping. That might be the one thing that hurts Meta. Microsoft, also great earnings. I could say the same thing, except Microsoft closed down here and Meta closed in the middle. Um, but also in response to earnings. Powerful little button here. You can see 23% growth, but more importantly, the surprise. Everybody knows what the change is supposed to be before the earnings come out. I think it's a surprise that's going to move them. Microsoft looks great, but all-time high, 100% on the high-low jump bar, um, massive volume day at a top. If the market goes higher, so does Meta and Microsoft. Netflix. Netflix earnings back here, I don't think they were that bad. I think they were actually pretty good. I think their kiss of death was here is their earnings, 47% growth, a small surprise on earnings and revenue. What got them was they talked about their cost of production going up and their margins coming down. Right now, I guess maybe you could still say it's flagging here, but until a break above that trend line, I'm not touching Netflix. And then Tesla, which teased us and got back above the 200, doesn't look good here at all. Does that look like a long or a short to you? Looks like a short with a target down here to me, especially with some weakening seasonality here. Um, Not recommendations for what to do, just my comments about what the market looks like. So if I'm worried about the market, well, let me show you one other thing. Remember my Iandex? Lots of red on it today. Big winners were Carvana, Meta, PDUP, Microsoft. Big losers. See what the chart did. Holding. So rough day, tagged the 50, but closed above it. This one, it broke below it yesterday, but closed above it. A break above the 50, and this is that index, I'm probably getting out of this, out of more stocks. So right now, this has not rolled over, but boy, is it close. Couple of things you could buy if you really think the market's going down and you can't short. Dog. Dog will go up if the diamonds go down. So it's a contra ETF. Is it giving you a buy signal? Maybe. You're kind of where the thing usually bottoms out, but it's below the 50 to 200. I don't think I'd buy that yet, although it might be the right thing to do. SPXS, 3x of the S&P. This goes up 3 times when the S&P drops. Look at how it moved here from $5 up to 10, a double in just a short period of time. And if you had options, you could have made some decent change here. It's not moving yet. I wait for it to move. Uh, Triple Q is the long one, but SQQQ is the short one. And again, it hasn't started to move yet. It may, but I'm going to let it start before I start buying it. What else could you look at? I don't think I would short semis yet, but this is SOX. This one goes up when the semis come down, and no, it hasn't started yet. So I'm not seeing a lot of things. Let's look at TZA. This is the small cap contra. This goes up when the small caps go down. So the things that are supposed to move up when the markets sell off have not started to move. Good news is they're really cheap. Bad news is most of the time I buy them, the market starts going back up and they're a hedge. So I'm okay if my portfolio goes up more than I lose on the protection. But I'll watch those. I don't think they're there. And then lastly, let's just finish with my favorite scan. And if you've been here at all, you know what that is. Let's go to the impulse. Boy, I love what Praveen has built. Let's go to 2-day momentum. Put a price and volume filter on it. One looked okay. Reddit, I think earnings are tomorrow. If they were today, then it looks really good. Earnings were today. Don't see any earnings. Let's see if they had earnings after hours. Give me a second. I'll just run a quick quote on my phone. Oh, never mind. It's up 30 bucks. Wow. Wow. Can I say that again? Wow. Probably going to be too big of a move for me to chase. But Reddit, um, interesting. We got the signal before we knew the earnings. Had the signal during the day. I thought about taking it. Already look at ALNY. You see what happened there. Again, saying I got the signal today after a big gap up is cheating. I got the signal on this bar the day before. The reason why I wanted an intraday scanner, I knew that before the market closed. Alignment Healthcare had the dots today, had a big breakout, but I believe it closed back under the 200, so I'm not sure if I like that. VSAT, I guess they put the satellites on the airplanes. We just put one on our plane at work. It's expensive as heck. Um, don't like how it closed, but might be worth watching. PGen, Ecogen Industrial. It's kind of a nice breakout here. There's your two dots. Cheap stock. ELWS, a tech stock that's moving, but I don't like the chart pattern. And then Black Hills, a REIT down below. So I think Reddit looked amazing, but it's already gone after earnings. I think ALNY looks great, gone after earnings. TGen, and then the other one I like, not that I'm chasing anything with until I see the market give me a signal that it should. Deer looks good as well. So be careful. There are times to be heroes. There are times to not. The weakest 2 months of the year over the last 3 years have been August and September. We've had a significant correction in both. With the development of that Hindenburg Omen today, maybe it's time to take some vacation from the bull, raise some cash, be careful, and have money on the side because when we bottom, that's when we make money. And here was what that bottom looked like when I said the bottom is in. Then April 7th was this day here, was that big reversal. And we went lower the next day. And after that, we didn't look back. You got to have cash left to make money off the bottom. Have an awesome, awesome day tomorrow and a great weekend. And I'll have a video up probably Friday night or Saturday morning. Thanks, everybody. Please comment if you like him. If you don't, let me know what I can do better. Bye-bye.